All right, what's up, everyone? Welcome back to the channel. I'm Tokenicer, and today I'm joined by a special guest for a deep discussion into the macro long-term view and potential for Quant network, along with the role of ODAP. So over the past couple months, this guy's gained a ton of traction around the Quant community with his open discussions and threads. And he's kind of really just become one of the faces of the Quant community. So with that said, I'd like to welcome Greg. How are you doing, man?
Doing great, man. Thanks for having me on the program. I was really excited when you asked and happy to share some of the research that I've been doing lately.
Yeah, man, I'm a big fan for all the work you've done so far, and I'm honestly really excited for what we're about to uncover today.
Yeah, same. And just right back at you, I admired the volume of content that you push out across multiple channels. I know it takes a lot of work and you got to stay on the ball. And the fact that you cover multiple projects at once has always impressed me. I'm so laser focused on Quant. I can kind of wrap my head around things, but the way that you cover all these different utility projects is really impressive. So props to you.
Really appreciate it, man. So do you want to just kind of tell us about your background, what you did before getting into the whole crypto space, and then how you got so deep and interested into Quant?
Yeah, sure. So I'm originally from New York. I moved out to LA about 6 years ago to start some businesses, and now I'm living in Arizona. And I always had a marketing background, marketing and sales, doing online sales in terms of website optimization and email marketing and slide decks and podcasting, all this type of stuff. And found crypto in 2017. I bought Bitcoin in September 2017 at about 3,500. Was my first buy, and I was all gung-ho on, this is going to change the world and blah, 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 which I still believe it is. But, I really went head first. And before long, I had the majority of my net worth in it as a, bright-eyed, bushy-tailed newbie, and didn't really know what a market cycle was. And, we went up very quickly after that, up to 20K. And luckily I had a few altcoins that then followed in January. I got really lucky and kind of cashed out pretty big on Ripple at the top. And so I was able to kind of gain some profit off of, what ended up being a pretty brutal bear market for another few years. I worked during the bear market. I was working at a esports company in Los Angeles. And so I was kind of, cashing my paycheck and just kind of buying the dips along the way and still keeping my eye on things. Still very bullish on the space long-term. And then, in 2020, COVID hit and I lost my job, and then the bull market came back right at the perfect time. So, I played it really well because of the experience that I had, and was able to kind of run Bitcoin up and then cash that into DeFi, and DeFi went up. And then, early 2021 hit. I guess I should rewind a little bit. I found Quant in October of 2020. It was brought to me by a friend who I really trust. And I kind of was asking him what his biggest bags were, and Quant was his number 2 bag. And I was like, I didn't know what this was. So I started researching it and watched a few videos, and I was like, oh, damn, this actually is pretty interesting. I haven't really seen anything like this. And I started to just go down the rabbit hole. And within about a month and a half, I was just incredibly bullish, and I just couldn't really find any red flags in the project. So I continued to DCA as well as some of the other DeFi stuff. And then when the calendar turned, kind of all the altcoins went crazy in 2021. And I was, Quant was basically just chilling. It did go from about $10 to $40 in the new year, but some of this other stuff, synthetics and VeChain and, what was the other one? Haven. There was some privacy coin. I just had a bunch of ones that started going nuts, like 10, 15, 20x, whatever. And so I was just taking profits and dumping it into Quant, which, for anyone that was around from February to April of 2021 in Quant, that there was this running joke that it was kind of like a $40 stable coin. And we were seeing things like Shiba and Doge and whatever else, all these meme coins, everything that would basically anything on Binance Smart Chain was just going 10x within a couple of days. And Quant, this fundamentally sound beast just couldn't move. And it was very frustrating, but I continued to DCA and move profits into this token that I was extremely confident in. And then when the market crashed in May, after the China news and the Tesla FUD and whatever, Quant rebounded very quickly and just did a 10x and went to 400. And that was around, by the time I got to 400, we were already in September. And ironically, that's when I started doing some rooms on Clubhouse. Clubhouse is a social audio app. So if you know what Twitter Spaces is basically they ripped off Clubhouse. That idea of kind of having like a live audience in an audio room and that they can join the stage and talk. And so I had been building a Clubhouse audience for about a year. I joined that in November 2020. And a lot of what I was talking about was crypto. So I had like 6,000 or 7,000 followers on there that were all listening to me talk about Bitcoin and crypto and Quant a little bit, but just kind of in passing. So I thought, you know what, this thing is so crazy. I need to put together like a formal room, like where I break everything down and we go through all the partnerships and we talk about what is Overledger and Gilbert's background and et cetera, because I need these people. Like I can do these little 2 or 3 or 4 minute pitches on stage and people can ask a couple questions here and there, but there needs to be a deep dive, And so I did that in September. I ended up doing a bunch more over the rest of the year. I got incredible feedback. About once a month, I started doing these and just updates on the project, new things that come out. And yeah, it was really well received. I had done a bunch of podcasting in the past. And so I was used to kind of getting in front of the mic and I had my voice and I did a lot of preparation for these rooms. And so they were giving people value and I continued on that path. And then I guess in February, trying to remember, Max Basenko in January, came into the Quant Telegram and was like, hey, do you want to do a Twitter Spaces with me? I have a traditional finance audience and I want to show them Quant. This is like a nice, gap kind of token that, it's exposure to crypto that I think traditional people would understand. And I said, sure. And we did a room with me and Ghost and Hungarian and Jeff and Max. And we did a couple of those. And I started thinking about, hey, maybe I should start growing my Twitter a little bit. I'd had Twitter for a decade, but I'd never really tweeted. So in February, I started pushing some content and things started to move really quickly. And I was at about 300 followers and now it's like 2 months later and I just crossed 3,000 yesterday. So it's been really exciting. I'm getting like incredible engagement, incredible feedback. I'm having a ton of fun. A lot of the marketing work that I've done in the past in terms of like content creation and just playing around with Photoshop and Premiere and all these types of things is coming in really handy. And so, yeah, I'm just having a blast and, price is down, but I'm enjoying this in terms of just like building this community, and building during the bear market always seems to be the best bet. So when the price comes around and everybody else comes flocking in, we're already all prepared and we can handle it and we're ready to give value.
Yeah, man, for sure. And congrats on the 3K. Saw it this morning. But yeah, to just further add on to that, I remember like around when I got into Quant was also around that like whole $30-$40 stablecoin joke. So that was definitely a blessing in disguise, seeing it decouple from Bitcoin, as you mentioned, like earlier on back in September.
Yeah, it had a weird kind of, if you were watching it really closely, it definitely had like interesting price action the whole way through. Like the fact that it was stable when everything was going nuts, and then when everything crashed, it kind of went crazy. And it's like, okay, maybe there is something about this token. Maybe it does have a bit of a life of its own. And obviously now we're back again, kind of coupled with everything as Bitcoin is to the real market. It just seems like the whole world is kind of, feeling the same in every market. But I do think that Quant has a real chance to decouple probably sooner than a lot of these other tokens. And we can talk about kind of the future outlook later today. But yeah, I have a lot of, obviously a lot of bullish feelings towards the nature of this project.
Yeah, absolutely. So with that said, what do you think if we just go right into ODAP, talk about what it is, and then basically how it works compared to how our modern internet is today?
Yeah, for sure. So yeah, I mean, what is ODAP? So first of all, I think we should give like just a quick background on Quant. Quant is a global financial company that has built a powerful API solution for blockchain interoperability. So their CEO, Gilbert Verdian, has worked in high-level cybersecurity across multiple central banks and government entities, including the Federal Reserve and the Bank of England, and also in Australia. And through a lot of his existing relationships, he's been able to partner with and integrate Quant's technology into the biggest financial institutions in the world. And most of it's being done behind the scenes under NDA. Quant, their product Overledger, is a white label product, meaning that anyone that licenses their software can actually brand it as their own and not have to give Quant credit. So because of that, that's a great value proposition to potential clients, because they can say, hey, we have this blockchain solution for you, come use it, it's ours. But at the same time, for investors and for speculators, it's a little difficult because Quant is under non-disclosure agreements with regards to who they're partnered with. And that's okay. I think it'll just lead to a bigger bang down the line. But during all of this stuff that's going on behind the scenes and onboarding clients, Gilbert is also leading multiple standards bodies around the world, including an ISO standard, ISO TC307, which is the ISO standard for blockchain and distributed ledger technologies, where there's like 57 or 62 countries that are a part of it, that are all coming up with not just interoperability standards, but also governance standards and things of that nature for like how blockchain will be used at a mass scale, so that any business can kind of just look at this and understand, okay, this is how things are done. And ISO standards are used across the board, whether it's the size of paper so that printer companies know the dimensions, or the size of credit cards and things like that, like country codes, just things that are globally standardized. There's an ISO standard, and Gilbert started the ISO standard for blockchain, which is pretty crazy. And he's also a part of INATBA, which is a blockchain standards committee as well. He's actually co-chair of it right now. So this is what's going to allow for mass adoption, and the Quant CEO is right in the center of all that. And they have a technology that allows basically for multiple distributed ledgers or non-distributed ledgers and legacy software and legacy infrastructure to create multi-chain, multi-ledger applications. And so Overledger is the product. And now what ODAP is, it's actually a separate project. It's an open, right. So just to say one more thing, Overledger is like the company's product, right? This is a paid software. Part of it is closed source, part of it's open source. They are patent pending on certain things. So this is a private company's product that will allow access to an open network. So the same way that, let's say, Verizon or Spectrum allows you to, they're a private company with their, certain onboarding and offboarding to the open network that is the internet. So similarly, Quant is providing what are called gateways, and we're about to get into this in a second, onto ODAP, which is going to be kind of the upgraded internet, an internet that allows for the distribution of digital assets as opposed to just information. So having said that, let's just dive right into this, where I'll do a better job explaining kind of what I'm saying. So this is a thread that I put together on ODAP. ODAP stands for the Open Digital Asset Protocol. And basically, in order to understand ODAP, we need to just take a quick look at how the internet works right now. There's a protocol called BGP that is called the Border Gateway Protocol. And what it does is it allows different pods, different networks, different systems across the internet to communicate with each other to say, hey, if you want to send a packet from A to B, you can do it through me. I'm actually connected to both of you. And all of these different networks kind of hold up a sign that says, this is what I can connect you to. And then BGP allows the quickest routes to take place so the data can split up and go across the internet using other protocols. But BGP is kind of that routing system that it allows it to exchange information between networks in terms of routing data. And so before Border Gateway Protocol, we had a similar fragmented system where there were all these different systems that live separately from each other. And so I'm going to play you a quick clip from Thomas Harjano, who is the CTO at MIT Connection Science. They are working in tandem with Quant to create ODAP, along with the US government, Intel, and a bunch of telecoms companies and financial institutions. It's becoming a large project. And this is one of the co-founders. And this is basically a clip of him just talking about how the internet used to be.
The internet design of the 80s and 90s also faced the same dilemmas. We had local area networks, LANs, that employed specific data packet technology. And so there's a thing called border gateway protocol that are used in the internet today. So we're revisiting the same architecture for the purposes of blockchain network interoperability and crypto.
So rather than exchanging information like the internet does through BGP, ODAP allows for networks to find and transfer digital assets, right? So I say this critical ingredient will help us migrate from Web 2 to Web 3, from the internet of information to the internet of value. So right now, the internet, if I want to send something from A to B, I'm basically only able to send information, whether that's text, pictures, video, audio, whatever it may be, where you can't actually send digital assets unless you're using these blockchains. And that's a layer on top of the internet, but it doesn't allow for like blockchain to blockchain communication. We don't have that. We're still fragmented. And so this opens up the avenue for these things called API gateways, which is what ODAP is built on. This concept where gateways are put in front of different networks that allow them to speak a common language. So the gateways distill the information from any blockchain or any distributed ledger into a simple language, the simplest language, in fact. And you can select like what attributes from your network you want to put out there and which ones you want to get from other networks and which ones you want to search and retrieve, similar to the border gateway protocol, but using ledgers and blockchains. So this is Harjano, again, just talking about the basic structure of how the gateways will work in relation to the different blockchains.
You have gateway G1 in front of blockchain B1. You have gateway G2 in front of blockchain B2. So G1 is paired with G2. The design principle is that G2 does not need to know the interior constructions and designs and resources and addresses of blockchain B1 and vice versa. So you want to hide it. And that is to promote scalability. The internet today scales beautifully because each network is opaque to the other. It only shares minimum information about routes through the BGP routing protocol. So we're using that between G1 and G2.
So right now, the way that blockchains communicate is primarily through a third party. And you can do that. Like if I want to move assets from one chain to another, I can basically use an exchange like Coinbase or Binance. I can put my tokens on, I can sell it and then buy the other one. And that's basically been an interoperability solution, right? But it's through a centralized party. And then there's also things that are a little more decentralized that are these bridging solutions where, these companies, they build smart contracts that interact with both platforms. And then a lot of them, they work differently, but some will like lock your tokens up on one side and then mint ones on the other and things of that nature. But there's still this third party in between, this smart contract. And so that creates vulnerabilities. And it's still like a centralized third party. It's somewhat centralized to varying degrees. So this clip I'm going to play here is also Thomas Harjano doing a presentation on ODAP. And in this, he kind of outlines the way that things work now versus the way that things would work through an API gateway solution like ODAP.
Right now, what we have is really the top diagram. When you want to move assets, you actually have to transfer the asset to a mediating entity, and they will forward it to the next person in the network. So it creates this dependency on this entity. It goes against everything that decentralized technology is supposed to be. So what we want is the ability in the bottom there to have a gateway talk to another gateway in a direct, secure, and atomic manner over this network of networks.
Right? So I say here, ODAP strips networks down to their simplest data formats, bits and bytes. While this function is beneficial, it only accomplishes one thing, which is to create a common language. additional instructions are still required for networks to know exactly what to do with its assets. So even though the API gateways can distill the complicated information from the blockchain or the ledger into a common format, into the simple data format, that's all it does. And it basically says, hey, this is what I have on my network over here, and I can be interoperable with you through this common language. But that's all it does, is it just kind of like waves its flag and says, hey, this is what I've got, and you can come play with it or not, depending on the restrictions that I've put in place per gateway. But you still need all these other solutions to build on top of this common protocol now to enable for the things to actually happen. You need to tell it what to do now. And so again, Thomas Harjano quickly talking about this simplistic layer, but the need for additional layers.
The ODAP layer is just bits and bytes. It shouldn't know anything about the economic value. That's at some other layer above it. The common context in this gateway is ODAP, but ODAP on its own is insufficient. You need all this other stuff that addresses the particular scenario or use case.
So this is an example of different types of interoperability that need to be considered. And so there's 4 different layers. The first one is technical interoperability, which is basically ODAP, right? It allows the data to move across the systems by creating this language. The second one here is semantic interoperability, which is the actual thing that like will physically make the updates to the ledgers itself. So what does that protocol look like? There's the organizational interoperability, which is like terms and contracts and agreements. So from a business standpoint, you need to actually have built in a layer of interoperability that decides who and what and how and what the agreements are. And then there's the legal, which there's regulations and laws and anti-money laundering and know your customer and all that stuff. So it needs to go through certain protocols in that sense as well. So these all need to be considered. And I'm going to play you one more clip from Harjano here, talking about, for example, the need for a legal framework in the interoperability sense and that additional layer on top of ODAP.
When you begin addressing specific use cases, then certain other layers have to come into play. You can't cram in everything into one layer. You need to figure out your layered architecture up and down and say which section goes where. When these 2 gateways begin to open connection and eventually execute ODAP, they need to find out who these guys are. Who is responsible legally for operating that gateway? Things need to happen first at the legal layer before we can actually move assets. And the reason is because when you're moving assets, unlike the internet, it's not just moving bytes, you're moving economic value.
Right, so because there's money being moved around, we actually need a lot more regulation and a lot of understanding on who's on the other end. And again, we're speaking from a mass adoption standpoint. There's always going to be pockets of black markets. There's going to be people that want to be off the radar, that skirt the law, that do whatever it is. And I think that will increase. Obviously, like I think this technology does allow for things like tax evasion and what have you, but we're talking about at scale. Like what are institutions going to adopt? How are we going to bring mass adoption so that this is a part of everyday life? And because that's what we all want. We all, a lot of people in crypto, they say they want that because they want everything to go up and they think that this space is going to attract all this money, but the capital's not going to go there until the regulation is in place. And so these are the types of things that need to be thought through. And right now, the way that we do interoperability between these different systems, it's unregulated and it's also insecure and unsecure. And that's through bridges. And that we just mentioned with basically these smart contracts. And Harjano here, I said it was one more, I lied. I got one more Harjano for you. And basically this is him kind of talking about, the bridges and how you can actually use API gateways through ODAP, and the bridges can be another layer. They can be a layer, but you still need the gateways to provide resiliency.
if you have an entity providing bridge services, it in fact could implement the gateway function within its network. I do hope that the bridging community begins to look at the need to standardize the endpoints and the actual bytes going across the bridges. For your own security, the whole bridging concept is a richer construct that wraps around the gateways. In fact, one or more gateways will be needed that implements this ODAP commitment.
So this is one more angle of that. Talking about a similar construct is how, in this case, the DLT relayers, which is a broader term for bridges, can be implemented alongside bridges and to add security to bridges. And this is actually Dr. Luke Riley, who's the head of innovation at Quant Network, addressing that exact topic.
We should, for resilience purposes, add API gateways when we operate around DLT relays. If we have a user on the right-hand side here, for example, and they want to connect to the DLT relay, but also a separate DLN, they should really be going through API gateways to get the resilience it can offer, because a DLT API gateway can connect on the back end to multiple nodes, so it has a lot more resilience than just building your application off one node. And like in the DLT relayer slide, API gateways were used for resilience purposes for the Oracle interoperability category, breaking the one-to-one connection between the off-chain component and the on-chain node.
So if we can agree that gateways can actually add resiliency to existing networks, as well as provide new ability to transfer between networks from scratch, then we can move along and say that, okay, well, how are we going to actually standardize this and make it real? And Quant is working alongside MIT, as I mentioned earlier, but I'll let Gilbert, who is the CEO of Quant, kind of describe really quick how this all came about and how they're progressing.
So I've always had an idea of creating an internet protocol for money. Coincidentally, I've been thinking about it and I spoke at an event and one of the MIT people spoke at the same event. I just realized he gets it and MIT understands where this is all heading. And I approached him, I said, look, I've got this idea. We need to create a protocol that can allow the seamless move of digital assets between different networks and different gateways, an open digital asset protocol that anyone can implement and use. And they agreed. So we've got the US government involved, the Internet Engineering Task Force. They're the ones that endorsed and enabled TCP/IP to happen. They're the ones that basically created the protocols that run the internet. There's the likes of Juniper and Intel part of it. We've got payment companies interested in it. We've got telecoms companies interested in it. So it started to be a big thing. And what we're looking to do is to create that internet scale protocol to move digital assets. And at the core level, how does that one network have a gateway to understand and find resources to another network? And so that's what we're tackling, which is much larger.
So you can see just the level at which they're operating in terms of zooming out, and particularly of importance is that Internet Engineering Task Force, right? He mentioned TCP/IP, also BGP, SMTP, which is email, HTTP, which allows for the websites to show up on your browser. All of these protocols are managed and approved through the IETF. So this is the granddaddy of internet protocols, right? The Internet Engineering Task Force. And so that is who MIT and Quant and others are drafting and submitting and publishing these reports to that basically outline how ODAP will work and how API gateways will work. And they've been doing that for about 18 months now. According to Thomas Harjano, this is going to take another year or two because of the level of detail at which the IETF operates. And that's fine because, you know, when you're globally standardizing the upgrade of the internet itself, you better make sure that you dot all your I's and cross all your T's. But the fact that they're working directly on this is significant and comes back to, I mentioned earlier how Gilbert founded ISO TC 307. ODAP works within these TC 307 frameworks, of course. And the recent ODAP drafts, 2 of them were actually cited in a recent interoperability report written by Visa. So you can see down here, these 2 highlighted references. include Thomas Harjano, as well as Martin Hargreaves, who's the chief product officer at Quant. So this was significant in that they were recognizing this interoperability gateway work from through Visa. And then Hyperledger also, they have a platform called Hyperledger Fabric, which is actually the most widely adopted enterprise blockchain in the world among top 100 companies. And they have a bunch of different platforms that they put out. Hyperledger, which is they're an open source, nonprofit blockchain platform development system. And in multiple of their systems, they're now implementing ODAP. I'll have Tokenicer link this thread in the description if you want to click around to these screenshots. But they are adding support for ODAP into their new systems, including this new one that just came out last week. I'm not going to play this clip for you. You can watch it as well, but it's basically they came out with another platform. I think this is like their 18th one or something. This one's called Firefly, and all of them have different enterprise focused solutions. And this one also employs API gateways, which is just more credence to the fact that this is how data is going to be transferred in these different systems as we kind of scale and reach adoption. More credence to API gateways. The Bank for International Settlements is using them in multiple proof of concepts for their central bank digital currency. So Project Dunbar and Project Inthenon Lion Rock. This is also called the MCBDC project. And so in these screenshots, I'm basically just showing, that API gateways are employed in some of these technical prototypes that they are testing out. Oops, I just think I went back here. So you're seeing API gateways being adopted and being referenced and in these major entities. And there's a way that the way that Quant ties into this, right? If ODAP is this open digital asset protocol that anyone can develop API gateways for, well, first of all, there's a bit of a technical barrier, right? Because if I'm just at home and I'm like, oh, I want to use like the new internet, I want to be able to build a smart contract, let's say, between my business and another business and have it be done on this decentralized internet, and not have to go through, all these other systems. But I also don't want to be locked into like Ethereum, or I don't want to be locked into Solana or whatever it may be. I want to be able to interoperate between all systems and not have to think about it. And how do I get access to that? Right? It's like, I don't know how to set up a gateway. I don't know how to do any of that. So the same way that you sign up for a company that provides you internet access, there's going to be gateway service providers. And I actually made this up, GSP. I don't know if that's like a real term, but I believe that this is kind of how it's going to operate, where Quant Network is kind of the first GSP, where they will allow anybody to come in and spin up their own gateway, or you can use existing gateways and just spin up your own smart contracts, depending on what sort of licenses you buy from this company. And so this is Gilbert kind of talking about, again, the evolution of ODAP, but really how Quant's Overledger can tie into that.
So this is our way of establishing that mainstream adoption and creating this global ecosystem and this global network of networks where everyone can bring their own network. It could be private, it could be blockchain networks, it could be permissionless. And having the gateways, an ODAP gateway, you'll be able to access the rest of the network. And so for us, Overledger Gateway is the first ODAP gateway that's being built because we're at the forefront of that technology. There will be others later on, but we're the first out of the gate.
So that is one of the reasons that I'm extremely bullish on Quant, is because you have something like ODAP, which is being pushed through the IETF alongside MIT, who, by the way, MIT also created TCP/IP. So there's precedent here. So they're pushing through this technology as this open source stack for the next wave of the internet, for this digital asset internet. And then you have Quant on top of that saying, okay, cool, this is what's going to get pushed through, and we're intimately involved with how it's being developed. So we're going to build our software based on the compliancy nature of the ODAP restrictions and the ODAP protocol, such that we are going to be able to instantly use ODAP. And we're also going to add this level of interoperability that can create these smart contracts. So anybody will be able to create an ODAP gateway or an ODAP gateway service provider, right? But what Quant even does even further than that is that they are patenting their technology that allows for these multi-chain smart contracts. And so just because you can plug into the internet doesn't mean you can actually create an ordering, a single layer that's an ordering and filtering layer across multiple chains. And so that's what Overledger is. And that is what a lot of these institutions are already opting into and working with Quant on. And so right now it's a kind of a privatized system. It's just the Overledger network where they can all interact with each other. But then once ODAP is approved, then it becomes kind of this like standardized way of using the internet for digital assets. It will start to expand very quickly outside of the OVN, the Overledger network. And we'll talk a little bit about, I guess, where I see Quant fitting in the longer term. But this is what's exciting about Quant, is that if you believe in kind of this standardized approach through ODAP, then you can look at what Quant is doing and say, okay, it's not just in a silo. They're not just building some technology that allows for interoperability even. They're doing it on the back of a standardized global internet protocol that's being pushed through the proper bodies. And so it's very exciting. So this is just talking about kind of what Overledger's building. It's all kind of with enterprise and with KYC, AML, and the FATF travel rule in mind. This is just basically saying that they're going to be regulatory compliant right off the bat. These solutions that they're employing. Didn't mean to click that. And these are quotes from Gilbert talking about how he envisions Overledger Network and ODAP kind of all playing together. And you can read these yourself. They're quite interesting. This is one of the things that I find most interesting about Quant is the Telegram chats, where there's just a lot of fundamental analysis that goes down, and kind of Gilbert used to pop in there a lot more and kind of share information. Now Quant has scaled up to the point that he's very busy kind of actually running a business instead of just, he doesn't have time for like the AMAs and stuff. Cause it's like, I say it's like the equivalent of like, it's not Elon Musk or the vice president, but it's like something like that where like they're clearly like working at a very high level with very high level people on very high level problems. They don't necessarily have time to like drop in for like an hour AMA or a 30-minute AMA in Telegram. Like it's a huge honor at this point when he comes through. But these are some of the older messages where he kind of like outlines the vision and even who they're working with at this time, which is like multiple massive companies. And that's basically it. So the internet is upgrading. Please wait. I got my cool little GIF here, and that's it. So ODAP again is just this global protocol that will be open to anybody, and Quant is the first one that's building in a compliant fashion for ODAP gateways. And we're seeing API gateways kind of become a bit of a hot topic. Visa's referencing it. Hyperledger is using them. The Bank for International Settlements is talking about them. And so this will only continue to grow over the next few years. And Quant is in position as Overledger becomes a dominant force in the gateway community and the gateway services. The QNT token is actually directly tied to the usage of the Overledger network. So that's how it all kind of comes back full circle. And yeah, that's it for ODAP, man.
Wow. Well, first, I just want to say I've read this thread a couple times, and it's one of the most well-articulated threads I've seen. But when you really break it down like this, it just really goes to show not only the research you've done, but also just the scale of what they're building out ODAP to be.
Yeah, it's a bit overwhelming to even like kind of think about sometimes. And that's why I think focusing on the small stuff and the day-to-day is like the most important. You have to do, I know, the clouds and the dirt, that's kind of a thing that Gary Vaynerchuk talks about when you're building something or when you're looking at like a project that you're working through. It's like sometimes you need to stay in the clouds, and like ODAP I think is kind of the clouds where you're like, okay, let me see that 30,000 foot view of what's going on, and then you got to go back to the dirt and you got to do that day-to-day grind. And I think that's what they're doing with like Overledger and doing these drafts and us studying it and piecing it all together. But yeah, it is very valuable to zoom out every once in a while and be like, remind yourself like the scope and the scale at which this stuff is operating.
100%, yeah. And it's like something at this scale isn't just going to be built out overnight. It's going to take multiple like entities, institutions, private sector companies, and it's going to take years to actually build like these standards around this infrastructure.
Yeah, I agree. And I think, they're already like the ISO standard was founded in, I believe, 2016, 2015, 2016, and Overledger was launched in 2018. And so, we're only about 5-6 years into this. And if you look at the internet, we're probably the equivalent of like the mid 90s. And you're going to start to see, we didn't really see the internet kind of take full scale until, Facebook wasn't created until like 04, 05, and then YouTube 06, and then Twitter 07, and then Snapchat like 11. And so that you start to see that about 10, 15 years in. I mean, obviously we had the Googles of the world, the Googles and the Amazons kind of came out in like maybe 98, 99, 2000. So I think we're still a number of years away from this thing, like kind of on an infrastructure level, kind of rolling out. And that will be like the Googles and the Amazons. But then from a retail perspective, it might even take another 5-6 years. So this is a long-term project, but the upside is basically the whole kit and caboodle, right? And so it's worth kind of understanding it. And what's interesting about investing in crypto, especially if you think you have the winner, you think you've picked the project, and I think all of us, we wouldn't have bought tokens if we didn't think they were winners. The key is, can you hold it? Like, we all believe that if you snap your fingers and look 10 years down the line, that this stuff's all going to be in play. Whether or not you had the right winner or not is almost irrelevant. It's like, we just know that crypto is going to be there, and the economy is going to be tokenized in some format. And it's just like, well, are you going to be around for it? Like, you think you are, but are you going to get caught in a position where you have to sell? Or do you get scared and do you sell, or whatever it is? So that's the real challenge for me, is just making sure that you have streams of income that can allow these markets to kind of play out, because the money is certainly going to get funneled this direction. And I think that's kind of a nice segue if you want me to jump into the network effect side of things.
Yeah, sure. There were just a couple other things I wanted to mention real quick about just overall ODAP in that thread.
Go for it.
So the first one was just, I remember you mentioning ISO TC307 in there, and then showing that other, I guess, image of different layers of interoperability. So yeah, if you just want to scroll up there real quick.
Do you want to see the stack, the
Yeah, the stack. So yeah, ODAP would be the bottom technical interoperability layer, right?
That's correct. So it would fall under here, under these protocols and communication data formats.
Okay, so just two things. Do you think there will eventually be other protocols that are built to fit these other layers of interoperability?
Yeah, they have to be. And so they won't all be like protocols. So I think interoperability can kind of, it has a very technical connotation to it. But I think in this sense, like, if me and you, let's say, forget about blockchain for a second. If me and you want to cut a deal, I'm going to do your social media marketing and you want me to do it for you. We write a contract, and that is a form of interoperability between me and you, right? As we've come in this common language, and we've now interoperated our goals and desires and the payment and all of that stuff in a contract format. So it doesn't have to be like a protocol that's interoperable. It's just two different entities that need to figure out a common way and an agreement on something. So the technical interoperability is going to be the agreement of the data format in which we're pushing things. But then these other forms of interoperability aren't necessarily technical. They're actually more on a human level. Now you can build these out into like smart contracts and stuff to become more technical. But like the framework, the actual substance of the interoperability, quote unquote, is just like an agreement between humans. So again, to look at this tweet I guess I can leave it up. The tweet is on the right-hand side here. It might be easier to digest. Like the semantic interoperability, this is also a type of, I guess, technical, where it's going to be changes to the ledgers. But like organizational is more like terms and contracts, like I just described. And then legal is going to be more like the AML and the KYC and stuff. So again, interoperability, all of these things are going to answer your question, will need to be taken into account. It just depends on how and who and how it all builds on top of the technical protocol.
Yeah, okay, because when I first saw that, I was like a bit skeptical on the fact that ODAP would be building kind of to fit into every single one of these layers.
Yeah, it's more like they are building to fit into it, right? And so like Harjano kind of said, like the gateways will communicate via the ODAP protocol, but ODAP alone is insufficient. ODAP needs other people and other businesses and other enterprises and developers to come and to build and tell the protocol what it should do. It doesn't do anything by itself other than create a platform and a protocol that everyone can agree upon that's standardized.
Yeah, it just allows communication between these different parties. It doesn't allow all these other things that need to be built over it.
That's right.
Okay, and then the second thing I was just going to ask is, where would you see ISO TC307 fitting into there, if it fits into there at all?
Yeah, so I can just bring this up real quick, and I'm not going to pretend I'm a TC307 expert, but what I will say is this is the official technical committee for blockchain and distributed ledger technologies. And you can see that it was created in 2016, and there are 42 participating members and 20 observing members. So basically I guess these countries, and by members, they mean countries, literally. So I guess if I click the 42, does it show me? Yes. So we see Australia, Brazil, Canada, like, France, Germany, India, like Italy, everyone's here, right?
Yeah, any like G20, G7 nation.
Yeah, UK, US, everybody. So they're all participating. They're in these conversations. They're in these technical committees. These are the different technical committees. So they have all these different things that they're trying to come up with guidelines for. For example, like the governance committee actually just put out their official like working group paper that says this is blockchain governance. Apparently it took like 5 years to work on, and they just released this like 2 months ago or a month ago. And Gilbert is still leading the working groups around interoperability. So if you hover over this eye right here, or I guess click it, Mr. Gilbert Verdian, and then there's another interoperability one here. Oh, I don't know why the eye's not there anymore. It used to be, but he used to be leading this one as well. And so, but they're not all interoperability. You have like, I don't even know what a lot of this stuff is, but like you have the digital currencies one, you have security and privacy and identity, governance, use cases, smart contracts. What are the agreements and the standardization of these things that we can all agree on how to solve for, like disputes and failures in the systems and all these types of things. So how do I see it playing in? I think that ODAP is being designed in a way that's compliant with the standards that these folks are discussing and coming up with. I don't know if I can really get more specific than that, but this is like ISO stands for, I know I'm going to say this backwards, but that's actually what it is. It's the standardization. Oh God, now I even forget.
The International Organization for Standardization, right?
Yes, there you go. So it's actually not, they don't say it in the right order, but I guess you don't want to say like IOS, so they made it ISO. But yeah, International Organization for Standardization, that is correct. And so, yeah, this is what all the countries are going to go by. And then it's going to be like, oh, and there's a protocol that fits under the standards that's approved by the Internet Engineering Task Force. Like, okay, like, let's go. Right. So
yeah, I guess when you're approved by like 2 standard setting bodies, that's definitely huge.
Yes.
But yeah, that's pretty much all I really had to say in regards to ODAP. And then just basically what you said about Gilbert Verdian not really being active in the Telegram chat anymore. I don't think a lot of people realize just how busy and the scale of what these guys are doing at this point, working with guys like MIT, central banks and stuff. Like, they don't really got time to be hopping into a Telegram chat and like talking with the community relative to like most of your other projects out there.
Yeah, and that's definitely been a point of contention in this community, at least with some of the people that are not as committed to it, let's say, like maybe a recent token buyer or something of that nature, or someone that's not as bullish or whatever it may be. You're in the crypto space and things operate a certain way in crypto. And the thing about Quant is they're explicitly like not a crypto company. They are a B2B enterprise company that uses a token to secure their network. So they don't operate like a crypto company or a crypto protocol or a project. They operate like a private business that we're fortunate enough to be able to opt into via their token, that if you believe in their network, you can actually, it's not like buying a stock where it's a little more psychology based, right? I mean, people look at like revenue reports and whatever, and then based off of that, they buy the stock, and it's more psychology where of course there's psychology in tokens, especially at this stage, this nascent stage, ultimately, this is a utility token that is needed in order to operate the network. So if you believe that the network will scale, then the token will also rise in price. And so this is a blessing that we're being offered this opportunity to just go and freely buy these tokens. And that at the same time, that doesn't mean that Gilbert is required to come and pat us on the back or to give us the update on the roadmap. That's not part of the deal. The deal is that they're going to go out and create a brand new system for the freaking world. And we're going to be lucky enough as a bunch of plebs to jump on the back and hope that he's going to make us millions of dollars. So that's kind of like my message to people that get really antsy about like, oh, you know, last time he came in was in November to give us an update. It's like, yeah, well, watch some of the panels that he's been on in the meantime. Look at the updates that are coming out on the site that they're distributing every 2 weeks to upgrade their technology. Like, look at some of these partnerships that, you know, we're starting to leak a little bit and we're seeing, you know, through the cracks. Like, take that as the communication. Why don't you just look at the work itself? Because it's very obvious. And if you need Gilbert to come and pat you on the back and tell you everything's going to be okay, maybe this is not the project for you.
Yeah, that's a great way to put it. Like, it's very different from your usual CryptoPot project in just about every way possible, just because it's not just kind of working in the sense of connecting TradFi together, which I guess kind of is seen in a darker light around the space, but it's just very, I guess you could say, professional in this sense, which isn't something you see too often. Yeah,
that's right. And again, people expect a certain level of transparency because of the ethos of crypto, but this is a lot bigger than crypto. The crypto space is, I don't know what it's at right now exactly, but it's what, $1 trillion, let's call it. And that's nothing. Like, that's a fraction of 1% of the money that's flowing around the world. And Quant is tackling the other 99+%. As well as the 1%, but the 1% is clearly secondary on their priority list. And so they're focused on enterprise clients and they're focused on mainstream adoption. And you can see that through every step that they're going through. If you track them, you say, okay, this is clear. This is aligning with this mass adoption vision. And crypto is a part of that. And you'll be able to, you know, connect the blockchains. And of course, that 1 trillion, I believe, will grow to 5, will grow to 10, will grow to 20 over time. But that's not where their focus is. And I think that's another thing that people bring up is like kind of these community gateways and like, when are we going to be able to stake? And when are we going to have the community gateways? And it's like when they're ready, dude. Like, they're not ready yet because look at all the other stuff they're doing. It's not like it's been radio silence. It's like they're pushing out massive updates on the regular. And you just have to have a longer term vision. And by the way, the staking is not going to be that juicy. Like, get ready for that, guys. Like, because it's based on actual utility and transaction volume. Like, the only other reason you're getting 8, 10, 50, 160,000% on time or whatever, like, the only reason you're getting that stuff is because they're all Ponzi-nomics and they're all inflation. You know where those tokens are coming from? Those free tokens you're getting? They're just printing them and they're just saying here, or they have like 50% of their token supply is just allocated to giving away for free. That's not the way the system works. And it's not, you know, that devalues in the long term, the value of your tokens. The way that Quant works is that there's a hard cap. There's only 14.6 million tokens and that's it. They're already all minted and they're already in supply. And so they're quote unquote, some of like 1 million of them aren't circulating because they're still in like the original wallet from the founders, but they're all minted and they're all like, there's nothing new that's going to enter the market. So the API gateway, community gateways, when you get your yield, it's going to be based on the actual transaction volume that flows through your gateway, and they're going to break you off a piece. And it's not going to be 10%. It's not going to be 5% probably. So, you know, you're thinking low single digits here. I wouldn't be surprised if it's 1%, right? This is not going to be, I don't think personally, and I could be wrong about this, but I don't think it's going to be in the short term, any sort of like passive income where you're going to be able to stake your quant and kick your feet up. You know, you'll maybe make some free quant. Think of it this way. If you were in Bitcoin in 2012, 2011, and you were able to like, you know, be some sort of mining operation on your laptop, and you were able to mine, 5 or 10 Bitcoin over the course of a year. If you fast forward to now, that's fucking epic. But back then, that's going to throw you a few $100s. It's like, it's not really going to do anything for you in the short term. So the idea of running a gateway, in my opinion, these community gateways, once they do launch, which who knows when that's going to be, like end of this year, maybe next year, stop thinking that it's going to come out like tomorrow and expecting it. It's not going to give you the immediate returns that you want. And if the team thinks that they're better off working on massive enterprise partnerships and onboarding governments and onboarding, like you look at what they're doing with LackChain, which we can talk about in a little bit. Like this is, again, mainstream adoption, true mainstream adoption, not, just little small yielding protocols.
Yeah, definitely. Like, I think people misconcept the idea of mass adoption as retail buying into crypto, when really it should be seen as like these corporations, governments, and other standard setting entities coming in and adopting the space and building out the proper regulatory frameworks for it.
Yeah, that's right. And eventually retail will all touch this, but it's not like, you have to understand, anyone that's watching this video right now, understand that you are in the vast minority. The people that are going to go out and they're going to buy their tokens and they're going to try and stake it on different protocols and they're going to watch YouTube videos about ODAP and Quant on Tokenicer's channel, we are a small group of people in relation to the rest of the world. Most of the world is going to get in touch with this technology through regulated formats and through enterprises and through governments, wallets, and through CBDCs and through all of these massive scale projects that are going on and are being developed right now that we are tracking and bringing you content around. But if you expect people to come through and just everyone's going to start using these systems and whatever, like when are we going to get these gateways so retail can get in? That's not what it is. You're better off having them build systems for large enterprises that can then distribute to all of the regular people, because they're the expectation that you're going to have millions of people individually onboard themselves versus 100 or 200 enterprises flick the switch on and then you have billions of people. That's the way you want to go. It's just going to take a couple more years, and be grateful for the opportunity and stop trying to rush everything.
Yeah, for sure. Great way to put it. And just before we move on to network effects real quick, I just wanted to kind of play devil's advocate to what you had to say about the yield as to gateways and stuff. But I do believe the yield isn't going to be what many of these people are expecting. But at the same time, I think in the longer term, since it's not based on a certain percent APY, it's basically based on the transactional volume of Overledger, right?
Right.
So over time, let's say 5-10 years down the line, when Overledger gets mass adopted and is being used by enterprises and central banks, with that amount of transactional volume, I feel like these gateways would actually return a decently reasonable amount, especially given the fact that the price of the QNT token would likely rise over that time.
Yeah, it's very tough to say, and I am not sure. I did say that because I'm not, and it's my belief that there's going to be different checks and balances in that scaling. So at the same time that you're having more and more adoption of the network, you're also going to have more and more gateways spinning up, and you're also going to have kind of a scaling approach within what the gateways allow. So for instance, I'm pretty sure that they've said that in the beginning, all the gateways are going to process the same amount of transaction volume, but then it's going to come, eventually they're going to turn it to where the amount of QNT that you put into the gateway actually allows more traffic to flow through. And so, yeah, it's going to be interesting. I'm excited for kind of that next phase of just figuring out what the interesting game theory is around gateways and around token allocation and supporting different ecosystems that pop up within Overledger network. It's going to be very interesting because in the internet, everyone saw the same kind of potential to connect everything and enable this distribution of information, but they didn't know that what a social network was truly. They didn't know what Twitter was or what Snapchat was or what Facebook was or anything like that, or what Netflix was or what eBay was or what any of this stuff, Uber, like this stuff really changes the way that humans interact in real life via these platforms. We don't know yet what ecosystems and applications are going to pop up. And I think if some of those are built on top of Overledger, then I think there will be game theory around how to utilize your QNT tokens. And that's something that it's just even too early to even kind of explore because we don't understand yet. But I think that'll all play into kind of, what kind of yield you can get.
For sure. Yeah. Like this, we often forget, but this company is only like 4 or 5 years out now.
Right.
But yeah, do you want to move on to gateways now? Or not gateways, sorry, network effects.
Yeah, absolutely. So just kind of on that same thought process around scaling, I just want to quickly run through here what network effects are and how they work and why it's important for something like Overledger. So let's just scroll past this and just a quick couple definitions. A network is an interconnected system of people or things, right? Simple enough. And they're found in every complex system from power grids to internet companies to the human brain. And networks are made up of nodes and links. So you basically have the participants in the network and then the connections between the different participants, right? And network effects are the idea that the value of the network increases in direct proportion to the number of nodes in the network, the number of participants. And there's different ways to measure that. And there have been multiple attempts to measure that. We can all agree that the more people or the more participants there are on a network, the more valuable the network is. But how do you actually quantify that? And so there's been a few of the major attempts at this are Sarnoff's law, Metcalfe's law, and Reed's law. So Sarnoff's law was the first of the bunch. And this was a guy that worked in broadcast television. And so he basically said that the TV network is valuable because the number of viewers, right? So if this is the network, if this is the TV, how many people can we broadcast to? And the more people we can reach, the more valuable our network is, right? And that's great, but that doesn't account for two-way communication. This wasn't accounting for the internet, right? This is only one-way broadcast. So then Metcalfe's law basically said that not only is it just who you can get to from the source, but also all of the entities between each other. That also adds all this extra value to the network because we're not just receiving information, we can also write information to the network itself and communicate with these other nodes on the network. And this is one of the most common network effect laws that's cited, is Metcalfe's law. But then there's even one that takes it further, which is Reed's law, that says not only can we talk to each other, but you also have to account for all of the subgroups that can be created and have them all talk to each other and all the different possibilities of groups of 2 and 3 and 4 and 5 and 6 and 7 and how they can talk to all the groups of 2 and 3 and all the combinations just explode, right? And so it's up to you. And I haven't actually done enough dive to know, it's hard to tell what's right, but these are some of the different methods and the different quote unquote laws that measure kind of network effects. And there's a company called NFX, which stands for network effects, and they have done a lot of research on this subject. And they found that out of all the internet startups, basically, these tech startups, 70% of their value has been created based solely on the network effects that they've created, right? So under 20% of startups have network effects, but over 70% of all of the tech market cap can be attributed to network effects, right? So what this says is that a small number accumulate a ton of network effects, like the Facebooks of the world and the Twitters of the world, and that acquires most of the value. So the network effects are directly proportional to the value that's being captured, but it's a lot of it goes into a small amount of companies or protocols or networks. And now Raoul Pal, who is a figure in the crypto community, but it comes from a traditional finance background, he did a great thread, which is linked here, that I would highly suggest you go read, that basically back tested a certain formula that showed that if you do a simple formula of the daily transaction volume in dollars on a given network and you multiply the daily transaction volume by the number of active nodes. And they didn't actually clarify what active meant. I guess you could say, was it active daily? Was it active monthly? Was it what? So I don't know what that means exactly, but let's just assume that, they're active participants in the network. So the number of active people multiplied by the dollar value that's circulating on a daily basis. And that simple multiplication of those two numbers will backtest perfectly against these different prices of these charts. So actually, I'm going to click into this thread real quick and just show you what they presented. We're not going to go through it, but just on these charts. So when they took those numbers for Bitcoin, this is what it looked like. So you can see that the Bitcoin market cap is the blue line, and their network value model that they created of those two things multiplied is the white line. So very similar, right? And then they did it again for ETH, which is right here. The blue line is the market cap and the white is their network model. Of course, it doesn't stay perfect all the time, but it's pretty obvious that this tracks pretty closely. This is for XRP, and then this is for Polkadot. And so what they're telling you here is that this simple multiplication of the daily dollar volume that flows through a given network multiplied by the number of active participants in the network will directly map to the price action and the value of the token represented in a digital asset network. Okay, so this is super powerful if true. And again, this is just reiterating that. And I say that it paints a very, very bullish price potential for Quant. And there's a few projects that I lay out here that show kind of the mass adoption. For example, LAC chain and LACnet, which is basically a distributed ledger network that is combining 12 plus Latin American countries. They're going to be deploying the Latin American dollar. And this will, like we were talking about before, instead of having 1 million people all sign up by themselves, it's basically this government entity that's coming in and saying, hey, look, here's like this regional network that we've created for Latin America. Here's the currency that we want to use. It's going to be pegged to the dollar. It's going to have connection back to the United States. And we are going to bring everyone into this network in order to operate with all these new systems and new businesses that are coming on through blockchain. Quant is providing interoperability for that entire system. Okay, so this is a way that you get millions of users over just the course of a couple of years as they start to turn this stuff on. And they've said that LACchain is set to go live in 2023. And Gilbert just reiterated that 2 days ago, yesterday, on a panel on the Financial Times Live Summit. So 2023 for LACchain. Another example is Oracle, which has 430,000 customers, and then all of their clients, all the customer clients. Quant is their interoperability solution for Oracle's blockchain platform. And so you have all of these different enterprises and all of their customers that as they start building on blockchain more and more and more and interacting with different networks, it's all going to be built on the back of Overledger, right? And then you also have the central bank aspect where Quant, one of their first major use cases is CBDCs and the central bank digital currencies. And the amount of people that that's going to bring on and the amount of transaction daily volume that that's going to bring on, even if it's just the banks transferring between each other and not even gone off to the retail CBDCs. If you're just talking about the wholesale central bank digital currencies, the ones that are going to be doing cross-border payments between different central banks, the volume, the daily transaction volume is absurd. Eventually will be trillions of dollars per day. So if you go back to that formula, daily transaction volume in dollars multiplied by number of nodes, just those three ideas alone, the fact that they have all the central banks moving money is all the volume you need. And then you have all the number of users that are going to be across, all of Latin America, all of the Oracle, hundreds of thousands of enterprise clients. If this is supposed to directly track to price action, well, the zero inflation QNT token is going to see an explosion. And we saw the first hints of that type of explosion in 2021 when the token went 10x in no time flat. And that's the type of thing that happens when there's going to be no supply. And we add in, I didn't even touch on this thread. Well, I guess we can go a little further. Here's all the different use cases on top of like finance and the CBDCs and stuff that we're talking about. healthcare data. This is where Gilbert actually started. This is the first interoperability system. ISO reached out to him and said, hey, can we standardize what you just built to combine all these Australian healthcare systems? We need to standardize this for the world. Like, that's the type of level. And he's already been working, like Oracle already has they just bought a company called Cerner for like $40 billion. That's like a massive healthcare data. I mean, this is a massive industry. And all these other industries, metaverse, interoperability, smart cars, and things like that. So the use cases are huge. And we're not even talking about the gateways. The gateways are going to lock up. If you look at networks like Solana, like Tezos, like Cardano, you're looking at 70+% of those networks being locked up in their staking. And so if Quant, which I believe has a really strong community and really wants these gateways, they're hungry, even all the new people, it's like, how do I stake? Like, that's all people care about. And the enterprises are going to do that as well, because if they can open up these gateways, they're going to create a ton of revenue. And they're also going to create an interesting new revenue models in terms of how they want to release their data. They can monetize their data through these gateways. QNT tokens are going to be needed to stake to all those gateways. And so all of a sudden, you have 60-70% of the supply off the market of an already scarce token in an ecosystem that is going to go parabolic in terms of number of users and daily transaction volume. And so that's where you're going to get the price appreciation, according to this network model that the global macro investor, the Raoul Pal company, came up with. And so I would highly recommend checking out his thread in addition to my thread if it's interesting to you, but definitely check out this thread, his about the network effects and how it applies to digital assets via this simple formula. And I believe that Quant is in a position to, if you just look at the confirmed partnerships alone, forget all the stuff that's under NDA, which is probably 90+% of their partnerships. We're going to see a huge amount of people and money come into the network, which will directly impact the token price.
All right, another great breakdown of a thread. I just want to further add on to what you had to say about overall network effects, as we've kind of seen like the internet of information take off in terms of the network effect in things like Facebook and Twitter and stuff. And we see that at the start, it does move kind of slowly, but because it moves so exponentially over time, once it really starts to take off, it just doesn't really stop going up.
Yeah, I mean, it's like you said, we just look at the internet and the networks that accrue the most value early on and the ones that succeed, they accrue the majority of the value. And so that's where something like, we talked about Overledger being the first ODAP gateway, like first to the scene with a lot of tools and a lot of connections and onboarding a lot of people really fast. It puts it in a really good position when network effects take place. They don't really let up unless there's kind of, they can plateau for sure, but it's rare that you probably see a network go parabolic and then just crash unless there's like some, third party kind of interventions.
Yeah, exactly. And Raoul Paul's been talking about network effects for quite some time now. And I just want to also say that those charts you showed from his thread showing how that formula perfectly matches with market cap is almost scary how that...
It's fascinating, isn't it?
Yeah.
That was the inspiration behind this network effects thread, was like, wow, if these charts are right, if it's going to map like this, if digital asset prices map to their network effects based on that simple formula, well, Quant is already pre-programmed to have a rise in price because they've already confirmed partnerships that are going to onboard millions of people and billions of dollars. And it's going to happen over the course of a few short years. And so it's quite obvious to me that based on these models, and any network, and that can go for any crypto network. If you believe, if it's clear that there is, I just don't think that there are as many networks that are as clear as Quant in terms of the amount of daily transaction volume and the amount of users that are clearly going to enter the network. The rest of them are more like, hey, we're growing really fast and this is great. And of course the price goes up with it because look at these charts. the future growth is there's still a big fight. And Quant has positioned itself where it doesn't really matter which one of these networks win out. They're going to all need to communicate via standardized protocol. And Overledger isn't one option, and the first and currently only option to use those standardized protocols to interoperate.
Definitely, yeah. And I also just want to bring up how you mentioned the three different, I guess, ways people view network effect, and that's Sarnoff, Metcalfe, and Reed's. So you said Sarnoff's law was based off like the network effects for television, right?
Yes, it's for broadcast media.
Okay, and then Metcalfe, I've read, is more based on telecommunications.
Yeah, so it's just this idea that there's an up and back. So it could be a phone network, maybe, or even an internet network. So it's either you have the one-way broadcast communication, or you have these two others that are taking different approaches to measuring two-way communications.
Okay, yeah, I guess that makes sense. I never really sunk that into how a TV is more of a one-way communication.
Right.
That
definitely limits the value of the network if I can't talk back to the node that just talked to me.
100%. You can't really talk back to the TV, right?
Exactly.
But another fact that Raoul Pal brings up a lot is just like the speed that crypto's growing at. He's stated that we're at, I think, roughly 150, 200 million wallet users.
Yep. So I think these charts actually, all of these 3-4 charts right here are all mapping internet growth to blockchain growth.
Yeah, and it's like growing at like double the speed.
Right. So the white line is global internet users, and the orange line here is crypto users. So you can see kind of like it's got more people, and it's like at a sharper rate. This is the same. White is internet, orange is crypto. This is for percentage growth per year. This one is for I think this is just this information's presented differently. And then this one is for, let's see. Oh, it's hard to tell. I think that's
just like extrapolating data for like
this is on the log scale. Yeah. So.
Oh, okay.
Well, I guess these are log scale too. I'd have to just sit and read these tweets exactly. But yeah, these are all basically saying what you're saying is that crypto is actually more quickly adopted than even the internet itself.
Yeah, and part of that is because people are trying to get rich and stuff. But the other part we can't like leave out is that like it is growing really exponentially, and part of that is thanks to the original internet and how fast we can spread information around now.
Yeah, that's right. There's a lot of excitement around this because we've already seen the internet blow up. So people are more willing to take a shot because the internet was something so brand new, is a little more skeptical. Whereas blockchain, yeah, it's brand new and people are skeptical to some degree, but there's less of like a mental barrier, I think, for people to start to get involved.
Well, I think there's a bit of a mental barrier in like understanding what this technology is fundamentally and understanding why it's essential.
Yeah, there is. And to get over that, what you said, there's a get rich quick aspect to it. So sometimes people will look past, the technical and the fundamental, and they'll say, hey, well, if I can get rich, all right, I guess I'll try it.
Yeah, I don't really need to know what it is as long as I'm making money, right?
Right. So you have the combination of all the different reasons that people want to get on.
Yeah, but that's just like one incentive for people to get into this ecosystem. The other more reasonable incentives are kind of like how Quant's doing it with their gateways, where us community members are incentivized to run gateways and be rewarded in QNT doing so. But at the same time, that helps decentralize the overall network.
100%. Yeah. I'm very interested to see how the gateway thing plays out, because I just think there's a lot of unknowns. And going back to just like taking it day by day and what you can control and letting the company kind of do their thing. Like if you're investing in the network, then that means you trust the company to take the network to where it needs to be. And so it'll be fun to go on this ride and see what happens.
Yeah, for sure. I think it's pretty funny sometimes seeing, because you've seen some of Gilbert's messages of him basically like indirectly calling out people saying like, we don't need you guys messaging us, telling us how to run this business.
Yeah, so that was part of his last communication back in November. He gave us an update on the Oracle certification where they officially certified Quant. And he mentioned that there was going to be a top university that's putting out a course via Overledger, which did happen through King's College London, that's teaching, developers, all blockchain developers, not just crypto developers, how to build for blockchain via Overledger. Like, gave us some updates like that. And then he also said, and by the way, like, you don't need to message us about this stuff. Like, we're doing our best. We got hit by COVID. We have a small team. Like, we have an overwhelming demand that we can't keep up with enterprise. And that's kind of where we're focused. The community gateways, we're running them. We're testing them. We have them. We're running like the software on our end. We're still working on it. There's no promises on when it's coming out, and please stop like hounding us. It's not going to get anything done, which is completely fair as far as I'm concerned.
Are you referring to like what Gilbert's saying, or the people hounding him for gateways?
As far as him coming in and saying, please stop bothering us, we're doing our best. I think that's,
I totally
look at all this other stuff that we're doing. I think that's a fair.
No, I completely agree. I think it's like crazy. Some people have the like audacity to like come in and like tell this guy who's worked at like multiple government and C-level corporations and say like, hey, this is not how you're supposed to run a crypto business. Like,
yeah. I mean, I totally get it. I get it that people are frustrated. Maybe they bought the top. Maybe they didn't buy the top and they're just impatient. Like, I understand frustration and impatience. I understand human emotion. I understand, maybe something happened in your life and this is just adding to it. And you're like, oh, fuck this. Like, when the fuck are gateways? Like, it's just something else that you're pissed about. But the reality is that, like, it's a company that's operating at the highest levels and you just have to let it ride.
Yeah, you definitely bring in a really good point in that, like, there's definitely other people with like other external factors that may play into how they're like viewing the space.
Yeah. I mean, anytime you're communicating with anyone about anything, you have to understand that like you have your own filters of life and you need to come at it. Anytime in your life you can come from a place of gratitude and graciousness, then it's going to work out better. And that includes like you use the word audacity. Like, I think it does take a certain level of like, I mean, just unawareness to be like, hey, why haven't you made me my millions faster? Like, it's such a strange dynamic that you're doing actually nothing and you feel entitled to millions of dollars. Like, just let it go. Like, focus on what you can focus on.
Yeah. But something else I just want to add again was we keep talking about the scarcity of the Quant token with it's 14.6 million, right?
That's right.
So I think some people often forget just how scarce 14 million is, because Bitcoin's at 21 million. So Quant being at about $100 right now is cheaper than getting Bitcoin is 33% cheaper than getting Bitcoin at $100. And I don't think that like sinks in for people enough.
Yeah. I did have a tweet. I don't know if I'll be able to pull it up that fast, but maybe I can. It's basically like this, just comparing BTC and QNT price. And I don't want to compare their use cases necessarily, like directly. But like, here's the tweet I put out was, I rarely talk token price, but consider the value of Quant versus Bitcoin. Quant has bigger use case if you consider that it's going to be all of the data rails for the entire internet, or that it has that potential. It has a smaller supply. It has less regulatory concerns because you think about they're working directly with lawmakers rather than trying to lobby them like the Bitcoiners are. And there's a more cooperative approach in their technology through just the nature of interoperability. Everything, no matter what wins, Quant absorbs value, whereas Bitcoin, it's like you need it to go directly into Bitcoin and they're only focused on building Bitcoin. And this is coming from someone who loves Bitcoin. I truly love Bitcoin. I think that it's the only decentralized blockchain or like truly decentralized network that we have in the world. I don't think any of this other stuff is. It's just on what level of centralization are you and how willing are you to admit it. But I think that Bitcoin is beautiful. I think that it's the only hard money that we have in a digital format. And I still think that it being 350 times the price of Quant is silly because of all these things mentioned here. So to your point, Quant at $100 is, if you wanted to make an apples to apples approach, that would be like buying Bitcoin, at like $65 or something like that. Again, it's going to take many years for it to play out, but there's enough evidence now in the Quant partnerships and the scale and the announcements that it's just a matter of time. And, back to the point earlier, is just like, can you hang on? Can you hang on?
Definitely, yeah. But to just add further on to kind of like the tokenomic thing, I just like you probably realize I don't really like to mention price and make price predictions all that much, if ever. But I think it is important to kind of look at the tokenomics and the overall like demand for the token utility and the case for a future supply shock, which, given how Quant plans to operate these tokens with licensing and locking on gateways, I think the case for a supply shock is very likely.
I agree. It's hard. It's almost hard to kind of fathom, but yeah, the order books are going to be empty at some point, and there's going to be, these supply like shocks through licensing, and like you mentioned, and maybe that's 70% of it's going to be off the market anyway through the gateways, and you're going to just get people that are like, they're going to realize that the network is undervalued, and they're just going to buy up everything, and they're not going to care necessarily about the price. As larger entities start to be like, oh, this is like a foundational piece of the new internet. Even though it's a privatized company, it's like, okay, we believe in ODAP. We see what these API gateways are doing. Oh, Quant is by far the leader in ODAP. Okay, then maybe we should get it. If you look at like Amazon and you look at kind of, the AWS, it's kind of similar, where it's like, oh, people start to understand the cloud and like what the value that brings. And it's like, oh, this is like the premier cloud services. Like, we should probably invest in Amazon.
Yeah, definitely. And I don't know about order books just being completely dry in the future, but like, as we've seen with Bitcoin, like back in the past, in like maybe 2015, 2016, there'd be common orders of like people buying 10, 20, 30 Bitcoin. You almost never see that now. It's usually buys of like 0.5 Bitcoin or like 0.02 Bitcoin and stuff. And I feel like we'll eventually see that with Quant, where people are like trying to acquire fractions and decimals of Quants.
Yeah. And that'll be pretty much tied to the USD price too, right? It'll be like, well, depending on how much it is, it's like, how much can I afford, or how much is actually worth my time? But yeah, I do look at it these days. I don't think it's asinine to look at like acquiring 2 Quant at a time or 1 Quant at a time, if you can. I think that might be like acquiring 1 or 2 Bitcoin at a time, which didn't seem like much a long time ago. But if the network effects play out, you'll be very happy that you did.
Yeah, exactly. Like if you told someone you were acquiring 1 Bitcoin a week for like a year straight, like 2 years ago, let's not say 2, but like 5-6 years ago, that probably would have seemed like nothing. But like at this point, if you're acquiring 1 Bitcoin a week, that's like, that's a year's salary for like a minimum wage paying job.
Right. That's why I think the gateways are interesting, because it's like, even if you only make a few Quant for the whole year, like that's a few more Quant that, if you fast forward, might be able to support your family for multiple years.
Exactly. Yeah. And the thing with gateways is that like, they're actually, gateways and licensing is that they're actually sucking in token supply and creating more token demand versus, let's say, Bitcoin. And this isn't to shit on Bitcoin or anything, but the only use case it has to like suck up, what's the word I'm looking for? Suck up supply and draw up more demand is just hodlers.
Yeah. It's hard money, but there's no like, you're right, there's no staking, there's no like, maybe there, I don't know the dynamics fully of like the Lightning Network and providing liquidity on there, but yeah, I agree that Bitcoin's a little more simplistic in nature in terms of how the token can be deployed and what its use case is. And I think it's a beautiful thing, but it also, it doesn't lend itself to like, people can sell it, I think, a lot easier maybe than when a network like this, if it actually fulfills its potential, would want to sell.
Yeah, definitely. And like, I don't know, Bitcoin definitely plays its role well in being digital gold and everything. And at this point, you can even wrap it onto Ethereum and stuff.
Yeah,
But
I think Bitcoin's great.
yeah, so I am a fan of Bitcoin. I just want to come out and say that at first, but before we get into this, are you cool with kind of like going off topic and talking just like very briefly about Bitcoin?
Sure.
Okay, awesome. I just want to like mention that like we understand that Bitcoin's decentralized in the sense it was created through whoever Satoshi Nakamoto is, but I just don't really think the consensus at the moment is really all that decentralized, because at the moment, if you want to come in and support the Bitcoin network either by running, well, let's not say running a node because you're not validating transactions. To set up as a miner, most times to even be competitive, you need some pretty steep pockets to get into that sort of subsector.
Yeah, I mean, it's not perfect. It's not a perfect network, but we already saw, I think, a great example of the distribution of mining and the stabilization of the network, or the stability, I should say, is when China went offline last summer and the network hash rate dropped and all the miners dispersed and had to like leave China and find new places around the world, but the network never went down. There were no 51% attacks. Like it's sufficiently decentralized. I agree that in order to run like a profitable, like large scale mining operation, that's not going to be affordable for everybody. But I don't think that means that there's a central point of failure in the network. I just think that there's certain levels of involvement that are going to cost more capital.
That's a really good point. I didn't think of how like when that whole China exodus happened, Bitcoin didn't really even miss a beat. Like there weren't any mentions of attacks or anything. It sustained the network fairly well, even when like 50% of the network went offline.
Right. And you just have the difficulty adjustment every 2 weeks. So, or whatever it is, I think it's every 2 weeks. And it just adjusts based on how difficult it's going to be based on the number of miners and hash rate and all that. So the system is optimized already for staying afloat, staying secure. And it's gone through so many attacks, whether they're like deliberate attacks or kind of like, this is a regulatory attack in a way. It's gone through so many of these things that it just gets stronger and stronger and stronger as it goes. And I think we're at an all-time hash rate right now. And so things continue to chug along for Bitcoin. I see it as sufficiently decentralized. I think that the only area that like maybe a little bit is like, I think the node software, they're all using like the same software. So like something like that could be like a point of failure. There's a great talk. Let me see if I can find it real quick. It's Balaji Srinivasan talking about decentralization. Like he tries to quantify decentralization. It's called, I'll have to find it for you. I don't think it's any of these. Oh, here it is, quantifying decentralization. There you go. This talk, I believe it's this video. We're not going to play it right now, but he basically breaks down, this is the video. He says that there's 6 different types of potential centralization for blockchains. And so you're only as decentralized as your least decentralized subsystem, right? So the idea that like you're only as strong as your weakest link. So if any of these subsystems are centralized, then you're centralized. And you can measure each one of these individually, right? So there's the mining, there's the client, which I was talking about, like there's the number of developers that are contributing to the network. Like if you only have one developer, like that's pretty centralized, even if everything else is like ownership of coins, number of nodes, and how many exchanges allow for like the distribution of your token. So this is a talk I would recommend checking out. And he kind of looks at, I think, Bitcoin and Ethereum and kind of looks at some of these see the client centralization for Bitcoin is actually quite centralized. And but yeah, I would check this out if you're interested in like quantifying decentralization.
Yeah, that's cool. I'm definitely going to check that out. But yeah, that makes sense. Like it goes back to the saying, like you're only as strong as your weakest link.
100%.
All right, but we've been going on for a bit over an hour now. I figured we'd just close it off with a couple quant related questions and then 3 fun non-crypto related questions. How's that sound?
Let's do it.
All right, so first question we got is where do you see Quant Network in 5 to 10 years, as in the role it's playing around our like technologically futuristic world by then?
Yeah, so I think, as I mentioned, like the AWS kind of like being the premier cloud services provider, I think we're going to see Quant being the primary API gateway provider for enterprise and for business. That will then trickle down into retail. I think they're going to have probably, all CBDCs will run on ODAP. And I think that Quant will probably capture like 60 to 80% of all the central banks' digital currencies that will run as Quant multi-ledger tokens. I think that some of the major use cases that will start to scale will be obviously the finance and banking and retail spending, but also I think digital identification, healthcare data, exchange volume, and interoperability between metaverses. And if we're looking at the longer end of that time scale, maybe the 10-year plus. And then from a price perspective, I think like 5 years, will be in the 4 figures and 10 years will be in the 5 figures.
Yeah, I think that's perfectly reasonable. I think my outlook is fairly similar. I think in 5-10 years, we'll see Quant become a household business name, maybe even see some advertisements of it up in Times Square and stuff. And I don't really have anything exact for price predictions, but yeah, I think 4 or 5 figures in 5-10 years is not far-fetched by any means.
Cool. I
agree. But all right, so being so involved with the Quant community, I'm sure you're well acquainted with many of the guys in there, like Ghost, Jeff, San, and many of those other guys. So who do you feel like has been most influential, most impactful, and kind of just helped you throughout this journey the most?
Well, for me personally, I would say there's probably 2 guys that have impacted me the most, have influenced me the most. The first was SEQ, who's written a lot of the foundational articles around Quant. He's put in a lot of time. He's since moved on to other ecosystems, but a lot of the foundational written material that surrounds the utility of the Quant token, how the Overledger network operates, how licenses work, all the things that it's kind of hard to wrap your head around in the beginning. He has Medium articles that he's written, and there's a lot of Telegram communication as well. So I've been incredibly flattered that people are comparing me to him, but I don't think that we're really on the same level. I just think they're only comparing because he used to do a lot of Twitter threads also, and that's kind of become my forte is these Twitter threads. So, but I think from a technical perspective, he's just on a whole other level, and he really influenced me. And also, you mentioned Ghost, the Ghost of St. Miklos. He was basically the one who was most in front of the microphone, I would say, talking about Quant. And that's no slight to Dread and to Luke as well, who also did a bunch of roundtables with him. But I think Ghost even took it further. By the time I joined the community, Ghost was still doing weekly chats in the Telegram and doing these weekly updates for everyone, and just kind of, he had a lot on his shoulders. So Ghost, as far as me kind of getting behind the microphone and doing some of the live rooms I've done, I admire Ghost a lot and the way that he thinks about the world. And I guess I'd be remiss not to throw Jeff in there, who just has been the most solid admin in Telegram that you could ever expect. And just the amount of he is so underrated in the amount of content that he circulates from all these different sources. I have no idea how he does it, but he just has this incredible way of bringing this information together and just feeding us. He just feeds us all day. And then he basically just confirms all the analysis through the amount of articles that he's posting all the time. So those would probably be like three of the guys that have impacted me the most.
Okay, yeah, that makes perfect sense. And like Sec has definitely, like, his work has definitely like really helped grow the quant overall community just over time, and it's definitely inspired a bunch of the work even I myself do around my content platforms. Awesome. I haven't really seen too much of what Ghost does, just kind of read through some of his threads and things, so I'll definitely have to tune into the Telegram chats more and check all that. Jeff, you're not much to add to that. He's definitely an amazing admin, and just some of the information he delivers is definitely very clear and concise. Though I think for me at least, the most influential quant influencer, I think for me I'd have to give to San, just because you know which San I'm referring to, right?
Of course.
Yeah, okay. When I first got into the quant community, I was basically asking a bunch of questions, a bunch of newbie questions like, why do we need interoperability? How does interoperability work? And he basically pulled me aside into a private DM, explained everything, and like sent me a bunch of really easy to understand diagrams.
That's incredible. Yeah, he's a beast, dude. He pushes, I would say, if you combine quality and volume, he's like the GOAT on Twitter right now for quant.
You're definitely climbing up there.
Thank you. I appreciate that. I definitely don't tweet as much as San, but I try to keep the quality as high as possible. So we both have not to say his quality is low at all, but we both have different styles, and we both have different communication methods. And I think both of them are super valuable. So yeah, I definitely tip my hat to San.
Real recognize real. And then for our last crypto related or quant related question, I guess, if you had to pick, who would be your favorite quant partner? And just for the sake of this, I'm not going to allow any NDAs.
Yeah. So my favorite is LACchain, I think, which is the Latin American Caribbean chain. And I do actually have a thread here that I think is very interesting to me. If you can still see my screen, I think that there was this guy that came out. I guess he is let me get his title again. He's in the blockchain space, obviously. The digital assets lead at Cambridge. And he basically put together a little thread that kind of went a little bit under the radar here, but it really spoke to me in terms of, he just like, oh, I just learned about LACchain and this is kind of blowing my mind. And he basically said that, how did he put it? That, where is it? I remember he said that, I guess he says it at the end, but he basically expressed like how interesting this is. So I just want to maybe just quickly run through this, because what it is a DLN, which is a distributed ledger network. And so we talked a little bit about the 12 Latin American countries that are all going to be underneath these systems that are being implemented. And it looks like this one is really interesting. So governance is decentralized. All the members have a say, but it's facilitated by a legal entity that orchestrates the memberships. Okay, so you can sign up through a legal entity, but it's decentralized governance. Members run their own nodes, and they have 120 plus nodes from 80 plus institutions and get technical assistance. And they can also run writer nodes. And there is a validator rotation mechanism so that you have different people validating the transactions at all times. Like it provides, as he says, maximum resilience and decentralization based on algorithms and performance. There's no transaction fees. There is end user privacy, because there's like I guess what's called a second signature step that provides like a level of privacy and anonymity. There's over 50 projects already up on there. So basically, yeah, this is what he said. I've not been this excited about permissioned blockchains in a long while. Really glad to see considerate initiatives like this finally reaping the harvest of the seeds they sowed long ago. So the reason this is exciting to me is like, okay, I can actually see like different regions across the world spinning up their own regional blockchain networks and distributed ledger networks. Blockchain is the first of its kind. It is the one that is out there on the front lines in Latin America, launching the Latin American dollar, creating these blockchain networks that have, according to this thread, pretty interesting dynamics to them that can be learned from by all these other countries in the world. And so for that reason, I think this is one of my favorite partnerships because it's really leading the way. And it's a public partnership with Quant. It is tied back to Citibank in the US. So there will be like, that's, I think, how they keep their peg to the dollar is through United States banks. And so it's a large scale project. Again, multiple countries are involved, double-digit countries. And I think it's really going to allow for mass adoption.
Yeah, I mean, the partnership with Blockchain, I think, is absolutely huge too. Like, in a single partnership, they pretty much connected a whole continent together and are designing a pretty much new tokenized currency. Like, that's absolutely massive. And the fact that Blockchain is formed by the interdevelopment banks that are made between 48 countries, like, really doesn't get any better than that.
Yeah, that's exactly right. And so this becomes a framework and a blueprint for other regions around the world. They can look at what's being done in Latin America and they can steal some stuff, they can copy some stuff, and they can also add their own little twists and turns. And Quant is powering the whole thing.
Yeah, and to see it being live into production like next year now is definitely going to be really exciting to see. But I think my favorite partner would... I've actually never decided on this yet, but it's definitely in between SIA and Oracle, just because with SIA, you're connecting 580 banks plus at once. Like, we see a bunch of other crypto networks out there that might have some ties to the finance industry partnering with a single bank, whether that be, I don't know, Citibank or Santander, and not to try and call out any other networks, but that's a lot slower of a process than just partnering with one of the biggest financial payment service networks out there and having them all available using your solutions. And as for Oracle, I think it's a really cool partnership because with that single partnership, you're pretty much attacking 12 plus different industries that all rely on tech and will in the future need interoperability between different DLTs.
I love that. It's mind-blowing, kind of the scope. And I like those picks because, to your point, they're both kind of like, for, no pun intended, a gateway into many, 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 many other partners, like, by second degree. So, like you said, you don't have to partner one by one. You make these one partnership and it opens you up to, hundreds and hundreds and hundreds, maybe probably thousands of different networks that will then use your technology over time.
Yeah, exactly. I like to call them indirect connections, and Quant's doing that really well. And I think that further just ties into how much we mentioned network effects, because when you partner with someone at that scale, the ability to scale out and unravel that network effect just accelerates all that much more.
That's right.
All right, and then just three final non-crypto related questions to close it off. So first up, what would be your favorite food?
Oh man. There's so many ways you could go with it, but like, I'll say one of the most foundational, this will be kind of boring probably, but the most foundational food in my diet is smoothies. I figured out over the last few years that like, you can get so much bang for your buck in a smoothie, and you can mix it up and be pretty diversified with that. And you can get a lot of nutrients and stuff just by pounding a smoothie, and still you don't get super full either, depending on how much you drink. So I just love it's like it's very flexible for me. So as boring, I think someone once asked me that and I got like laughed out of a room with that answer, but it's the truth.
Well, no, respect for that. Smoothies are very versatile. You can pretty much blend anything into them. I mean, I have one pretty much for every breakfast.
There you go.
All right. And then when you're not working on Quant content or any other digital media sources, what do you enjoy doing in your free spare time?
Yeah, I go for long walks every day. I do yoga as much as possible. I try to do every day, but probably like 4 or 5 times a week. And I play Valorant, which is a first-person shooter game on my computer. So I link up with a bunch of my buddies back home, and we just kind of, click some heads. So that's, other than that, yeah, I've been spending a lot of time on Quant, but those are the things that I do in my free time.
Awesome. Definitely seems like a really healthy lifestyle. Long walks and then some gaming with friends.
Yeah, we try our best.
And then last question would be, what are some things that you've done in your life that you're most proud of, and some things you're aiming to achieve in the near future?
Wow, good question. One of the projects that I'm pretty proud of was I built a audio speed dating app back in 2018 and worked on that for a few years. I was able to attract some really awesome partners that, without the hard work that I put in, I wouldn't have been able to bring on the project. It ended up not going anywhere because I realized that I didn't want to be a tech CEO. But what we did do is we actually did create a working prototype. We ran a bunch of speed dating events in Los Angeles and kind of proved the concept of the technology. And this was prior to Clubhouse or any kind of social audio. So I was like ahead of the curve on that and actually built like a working prototype that people really enjoyed and got some pretty good NPS scores, which is basically that score that says, how likely are you to recommend this to a friend, after using it, 1 through 10. We had like a 9 NPS score. So people, even though it was kind of a shell of a product, it was still like functional, and people really enjoyed meeting people basically one-on-one through audio calls versus like having to do the swiping of the dating app. So I was really proud of that project. And kind of what I did to take it from 0 to 1. And then what do I want to do in the future? I mean, my goals right now are definitely just continue to grow my Twitter and grow my influence in the crypto community. I've been approached over the last few weeks by a few different companies, potentially to do some work for them in the space. So it's amazing what can happen when you really put yourself out there and, you put out high quality work. People are attracted to that. And then I guess this is kind of public, or I've only mentioned to probably a few people, but I did actually apply to Quant.
Oh, wow.
As a product marketing manager. So I have some pretty relevant experience. So that would be cool. I don't know if they would make me move to the UK if I were to get that, but yeah, haven't heard back from them yet. So we'll see if that has any legs at all, but that's kind of like a short-term exciting thing. But, I've got a couple other people in my DM that I don't want to say who they are yet, but yeah, they got a lot of stuff cooking. So it's exciting.
That's awesome, man. And just like seeing your, I don't remember when I first started following you, but I think you were at about like 300 to 500 followers when I first followed you. So just seeing kind of the insane amount of growth that's happened over time on your account has just been like absolutely amazing to watch. And I think it's really well deserved for how you present yourself and how you present all your content so professionally.
Oh, thank you, man. I appreciate that a lot. It's been a joy, and the community is so positive and they respond so well to well-researched information. It just encourages me to work harder and to put out better stuff.
Definitely. Yeah. And really excited to hopefully hear back from that Quant application, because I think you'd be the perfect candidate for that, or if not that, then at the very least a community lead.
Yeah, well, from your mouth to Quant's ears, so we'll see what happens.
Yeah. But yeah, that's pretty much all we've got for today. Did you have any closing thoughts you wanted to leave the community off with?
Yeah, I mean, just want to reiterate the patience. I think that is really the most important thing, and focusing on what you can control. Like for me, as soon as I started working on pushing content and creating value for other people, more things started coming my way, and I spent less time kind of staring at the token price and feeling those negative emotions that we all get. So yeah, I would just, zoom out as much as you can, focus on what you can focus on, triple down on your research, keep listening to guys like Tokenicer. And I just want to reiterate to you, brother, like keep up the good work and keep pumping out the content. I'm really always impressed. I would say between you, San, and Citizen, like you guys push out just like the volume is just so admirable of like just always finding something valuable to talk about. So, and then you all have these other channels too, like the YouTubes and stuff that I'm just pretty much on Twitter. So you guys are pumping multiple channels, multiple projects, I should say. And it's great. So keep it up, and look forward to collaborating more in the future.
Thank you, man. I really appreciate it. And part of that volume of content is just honestly me getting distracted in class. So I think it's pretty funny people say that sometimes.
Yeah, well, hey, your passion is your passion, and you're using, even if it's like enabled by boredom, you're still bringing value to people. So keep it up.
Yeah, but anyways, thanks a lot, Greg, for coming on. It was awesome getting to talk with you. It's been something I've been meaning to reach out to and do for quite some time now, and I'm sure this won't be the last time we talk.
It's been a pleasure, man.